Hi, I'm Steve Chater with TCT, Property Management Services. And we are the resource for people building wealth with real estate. I heard some information the other day and I wanted to share it with you as part of our investor update series because we're here to help people build a better future. Here's the issue. Rental activities, homes that are looking for tenants right now are averaging a month or more on the market vacant, looking for a new tenant. And obviously, this is not in the best interest for you, the investor. And quite frankly, it doesn't need to happen. So let's just talk about some pricing truths because it really boils down to the pricing. Number one truth is correct pricing maximizes your cash flow. Too many people think that if I try and ask for more, I'll get more. Number two, price is always determined by the condition of the property and the location of the property. Okay, and we'll talk more about that. And obviously, overpriced properties sit vacant, and not only are they sitting vacant longer, but they come vacant more often because they turn the tenants over. So we protect our investor clients a number of ways. First of all, we don't rely on the asking prices in the MLS to set our prices because we actually know what the competition is actually renting their properties for, not the asking price, but the real renting price. So we're not guessing about the rental market. And of course, our job is to help you maximize your cash flow as an investor. Because remember, vacancy can be your largest expense. You know what I've heard lately is a lot of people are going onto Zillow and they get the Zestimate for what a property would rent for. And they go, well, they tell us Zillow says it'll rent for X. Let me talk about that a second. Zillow uses algorithms to guess what the rent would be for that property. Okay. And I want you, for those of you that aren't tracking Zillow and what happened, they used algorithms to buy homes and they went into the buying home business and lost millions of dollars using their algorithms and their numbers to buy the properties. So let me give you an example because this is a real property that we found in Gilbert, Arizona. And Zillow uses the algorithm and says that this property would rent for $2,800 a month. And you can see the rent estimate right here. Here's the deal. We actually know the market. And when we did the comps on what properties are actually renting for in that area, the comparables are at $2,300, not $2,800. That's a $500 per month difference. So let's just take a look. And I just want to show you something because I went and I did some research. And right now, the average days on the market in Phoenix is just a little over a month, 34 days on the market. Now, remember, average means that there are plenty of properties that are actually on the market even longer than that. And there's other properties that are on the market shorter, of course. So let's pretend your asking price is $2,500 per month. Each day that property is vacant, you lose $83. So if you were to be on the market for 34 days, your potential vacancy loss is $2,800. So what happens if we reduce the rent? If we reduce the price down, let's say $50, our new asking is now $24.50. And what happens if we get it rented 5 days earlier because it's just a little bit less expensive? Well, the money that you saved in lost rent is $400. And let's go all the way up here to $200 a month at $2,300 asking rent, which is what that Zillow property would have actually rented for. If it had rented 34 days earlier, the average days on the market, you would have saved $2,600 in lost rent. Okay, so what does all this mean? Well, I said that it's price and condition of the properties. And so not only is it making sure that you're asking the right price, which is what we help our clients do, but we ask the right price, not just on the comps, but the location. So here's a west side property, for example, the west side of the valley in Avondale. And the average rents in Avondale are $1.15 a square foot. Now look at what's happened to the rents. They were going up all last year, and now they've tapered off a little bit. They've been pretty flat through here at $1.15. Let's look at Chandler on the east side. Same things happened. The rents were going up, and now they flattened out. The Chandler average rent is $1.30 a square foot. So the same property in Chandler rents for more money than the property in Avondale. Location, 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 and of course the condition of the property. So we have the systems, we've got the marketing, we've got the experience. We've been doing this for over 40 years to help you maximize your return and get the best rent and the best renter possible. And obviously to do it in the shortest period of time to save you money. So let's just go quickly and take a look at what's happening in the market, because you've heard all of the news, and we did our update a few weeks ago, and we shared with you, hey, prices were coming down in the market, and then we flattened out, and then at the end of last year, we started bouncing back up. Look at what's happened this year. Prices on $1 per square foot basis have been going up every month since January of this year. It's a great time to be owning rental properties in Phoenix, even though the rents have leveled out. Remember, rents and prices follow the inflation rate, and we are in an inflationary environment. The other thing we talked about is property condition. And if you've had the opportunity to take a look at our one of our other YouTube channel videos, it's called Upgrade for Better Returns. And it talks to you about how to be competitive to get the absolutely best renter at the highest price and to get a great return on your investment. So the Phoenix real estate market is not crashing. Doesn't matter what you've heard in the news media. Our rental market is strong, and people that wanted to buy homes that now the interest rates are at 7%, they've decided to rent instead. While property values are still going up with inflation, and rents will go up with inflation, we've seen them skyrocket over the last couple of years. If you've got a low interest rate mortgage, don't lose that by selling your property. The property's going up in value, and your tenant is increasing your net worth every single month. So we help people build a better future. I hope this information is helpful for you, and watch for our next update, because we're coming out with a property update in the next couple of weeks, or a market update, in the next couple of weeks. By the way, if there's anything that we can do to help you specifically with your property, to take a look at it, to say, should you upgrade it, or should you maybe exchange it for a better property or multiple properties, please call, let us know. We're happy to help you. Thank you so much for watching our video.